one of the biggest problems that founders face, especially technical founders. And I will tell you right now, if you could ask our founders, we are very hands-on with the deck and the storytelling. How are they telling the story? They might have amazing technology, but because they're so in it and they're technical founders, like, well, why does this matter in the world? What kind of impact could this have? What kind of outcomes and sales projections could this enable? And some of that mindset's not usually there. It's, hey, we launched this amazing white paper. What do you think? It's great, but we actually have to turn this into a business. So that is a big mistake of not being able to tell the story in the right way and not being able to put it into the context of why does this matter to investors? Why does this matter to people?
Hey everyone, welcome back to the Ignite podcast. Today, we're thrilled to have Kristina Simmons, the founder and managing partner at Overwater Ventures on the program. She's an early stage investor focused on human and planetary health, helping to turn breakthrough technologies into beloved brands. Before Overwater, she was an investor at Khosla. We've heard of those guys, where she started as chief of staff for Vinod. Must have been very interesting. We'd love to hear about that. She backed companies innovating in bio, health, sustainability, and frontier tech. She also worked at A16Z. I've also heard of them. Lululemon, I've heard of them. Juicero, I've heard of them. And a unique blend of venture, brand, and operational expertise to the table. Thanks for coming on.
Yeah, thanks for having me. It's great to be on. Excited to hear about Overwater and some of the interesting work that our companies are up to.
Yeah, there seems to be this trend right now where folks are leaving and starting their own venture firms from these big firms. Maybe you could walk us through kind of that decision-making process and then we'll go back to the beginning as well.
Yeah, sure. I mean, I think venture is changing in a lot of ways right now. It makes sense. I think to reinvent venture, you can't do it inside an existing institution that's been around for 20 plus years. You really have to be able to do it on your own. And I think there are lots of reasons that we're seeing this, both in terms of, GPs wanting to focus on specific areas, focusing on whatever their spike is, and also from an economics perspective, I think you're seeing these larger funds get bigger, but in my view, smaller funds have greater paths to having great returns.
Yeah, that's definitely fleshed out in the data. I don't know if you follow Carta and Peter Walker. He posts a lot. He's been on the pod actually, and I always saw this data and heard about it and from various sources, but Carter really came out with something recently where it's like it's clear that funds under 10 and under 50 especially just outperform. It's just hard to 10x $1 billion. It's a lot easier to 10x $10 million.
Exactly. And I also think from a founder perspective, especially if you're focusing on early stage, it makes sense to have smaller funds versus large funds. I think that there's this bit of a gap to help early stage founders at larger funds. And so there are lots of reasons that I believe smaller funds are better, and also why we're seeing just this massive talent shift happening in Silicon Valley and beyond right now.
And it's hard for these large funds to deploy that capital, right? I mean, I think A16Z, their minimum check's like $5 million. And it's hard to write $5 or $10 million checks into companies that have, $500K of revenue.
Depending on the stage. I say this with a caveat, depending on the stage and the company. So there are always exceptions to rules, but for deploying 5 to 10 million in a pre-seed company or a seed company, it creates adverse effects. And so it forces the company, it puts more pressure on the company. They'll have to raise more for the next round. They'll have to hire different types of people. It puts a different level of pressure that I don't think is good for early stage companies.
Yeah, I mean, the whole premise of venture capital was this milestone-based financing, right? You raise a little bit of money, you get a little revenue, and then you raise a little bit more money and you get a little bit more revenue. These early startups with $5 or $10 million, it's just hard to live up to those expectations and grow into that valuation, right? Because now you're talking like, 10 on what, 50? And you have no revenue, it's just hard.
Or team. I recently saw a $30 million round for a seed stage company, first institutional round. It depends on the space. It depends on the competitive landscape. It's not always the case, but I do think being lean and mean with constraints comes creativity is a better model.
Yeah. So you've had an impressive career. Speaking of venture capital, brand building, ops. What initially drew you into startups? Maybe we start at the beginning and how you found your way into Khosla.
Yeah, I'll go back in time because I think it tells the story of why I chose the nonlinear path that I did. But I'm from Michigan originally, and I always like to find where the waves are breaking. So seeing where innovation's happening before others see it. I started getting into real estate early and then seeing.
I did that too. I did real estate.
And
yeah.
kind of really looking at how is the world changing and where is our opportunity is sort of the common course I've taken in my career. And I heard about this company early called Lululemon. And to me, it was not about black spandex pants. It was around this healthy aspirational lifestyle and really being a brand for helping people to live a healthier life. And went to their website. They had no e-commerce. And to me, that was crazy. They had something so much more than just the product to offer. And so after a whole lot of hustle, including flying myself to Vancouver and convincing the CEO to take a meeting with me, I got the job. So joined Lululemon, helped launch their e-commerce, was running social at the time. That was really early when brands were just getting on social platforms. We were really early to have both a global and local presence. That evolved to digital, and then a team called Emerging Products and Concepts. And that was really any potential large new revenue streams for the company, including building our own digital products, looking at partnerships and acquisitions, international expansion. And I started meeting startups this way. I started meeting different VCs. It was actually a pretty natural progression. We were working with Facebook at the time, and Instagram and Pinterest when they were a few people, and Spotify and Square. How could we use payments in new ways? And so we were exploring all of these ideas, and we were actually looking at machine learning and how could we be more than just black spandex pants, and I think ahead of our time. And I ended up spending all my free time with startups. I loved helping them. They weren't quite ready to work with a brand of our scale, and ended up getting an offer to join Andreessen Horowitz. So I moved from Vancouver, Canada to the Bay Area. That was a quite natural progression because I just loved helping founders, and being able to be at Andreessen when everyone could fit in one conference room. It's very different than it is today. Was an amazing place to be. And at the firm at the time, Mark and Ben had big ideas. They had, were just investing in Pinterest and Instacart and Coinbase at the time, when there were a few people. And I loved being in the venture ecosystem. With that said, I'll kind of breeze through this. But with that said, I think that the best investors have been operators before. They understand both the venture ecosystem and operating. And so I ended up getting a call from a few larger firms and convinced me to join early stage company, wanted to experience what is it like to not have a brand. And at Lululemon, we went from something like 50 to 2,700 people when I was there, but wanted to go early. So got to do that, got to be on the other end of launching a startup from scratch. I left when they were doing well. And that's when I met Vinod Khosla. And he was transitioning the firm from a generalist VC firm into what he calls societal reinvention. And to me, it was everything. I love the big, bold thinking. I love how he was thinking about breakthrough technology. I had been spending a lot of my time on AI and healthcare in particular, and he had just written a paper about it. He ran a crazy process. I think he had me meet every single person. I've never had anyone do more references on me in my life, and got the job. So I was there for 4 years, and amazing place to be. But I'll pause there, and then I can talk about
so much to unpack.
Moving into Overwater.
Yeah, what a trajectory. And so what was the startup that you joined? You kind of
it was a company called Juicero. I learned the fine. I learned what to do and what not to do. It was a interesting place to be, but we did a lot in terms of launching the brand and getting out there in the world, doing deals with Whole Foods and Equinox.
This is definitely a debate. You mentioned something that the best investors are former operators. I'm a former operator. I mean, I spent 20 years doing a variety of things. I think it makes me a great investor because I've done a little bit of everything. But there is this debate like, well, you can be a great investor without having been an operator. I think both can be true. But why do you come down on that one side of operators make the best investors?
So I think both can be true. There's always an exception to the rule, but generally speaking, building a startup is hard. And being able to have done it before, having the playbook of being able to know when to swoop in and when to swoop out is really important. And I think it's very difficult to have strategic conversations with founders around we're very hands-on. Like, what should your product strategy, how are you thinking about product strategy, or how are you facing this massive BD deal and redlining it, or how are you thinking about go to market? And having been there, it's much easier to roll up our sleeves to help them strategically. And you just can't do that without having had the experience, both in terms of what's worked and what hasn't worked.
Had that experience of failure in almost every functional area. So I know what good looks like and what bad looks like. But what did you learn at your time at Andreessen? It sounds like it was like the early 2010s. So this is pretty early days at Andreessen.
Yeah, it was. I'm trying to remember. I think it was 2012 is when I joined, something around there. it was an amazing place to be. So at the time, they had really modeled the firm after the CAA. Michael Ovitz was an advisor to the firm. And so how do you take bigger swings? How do you influence areas that aren't quite industries yet into the larger macro ecosystem? And being able to bring in a support system to help these companies in unique ways. And so I think that they did a lot of interesting things, including really focusing on building their own brand early, getting into the best deals, even if it was later stage. And I learned a lot for Overwater around how do we think about influencing these larger markets, whether it's from a government perspective or with big companies, or really understanding these more macro trends. And then also from a support system at Overwater, we've modeled it after similar in terms of how do we use our network effects? How do we use and tap into to support companies, but in a little bit of a different approach where it's more dynamic versus hiring those people internally. And so we have amazing advisors around the table and people who can support our companies.
Yeah, same. I mean, it's in our name, Team Ignite. I never thought I would do the A16Z approach of hiring a big support staff internally. I feel it's probably better to have kind of the loose confederation of outside advisors because they can be doing their own thing, right? I think like if you hire people internally to come in, I think maybe their experience gets stale versus having operators around the table, like you said. That can actually be like, hey, I'm in the trenches actually doing what you're trying to do, and I can help you do it as well.
I completely agree. And I think those people are relevant. They're in their industry. They understand the problems firsthand in real time. And so for our first one, we brought in a lot of founders and operators who we respect as LPs. We brought in technical advisors into our network. And I think that's much more powerful than hiring big teams or hiring mini generalists.
Right. And then let's talk about your time at Khosla. How long were you there? Kind of what kind of takeaways are you taking from there? And I'd love to hear the compare and contrast to A16Z as well.
Sure. So I was there about 4 years. Similar in the way that they think big about the world. I think both firms I greatly respect both of them, and they were amazing places to learn. So first and foremost, I think that they think big about the world. How do we understand trends before other people see it? I don't really like the word trend. It's a little bit hypey, but more of how do we invest where the world is going? And then also how do we influence these larger factors, whether they're large companies or governments? So I love that big thinking, like think big, think bigger, and then scale. The difference is Andreessen was much more focused on consumer and enterprise at the time. They've kind of shifted. There was only one fund at the time. So it was a little bit different in terms of the thematic areas, although they were generalists. And then Khosla was much more around breakthrough technology. So how do we invest in some incredible science or technology that's really moving the world forward that can create transformational change? So big ideas. So riskier profile, I would say leaning more towards early stage, although somewhat stage and theme agnostic, and taking really big, bold bets. And then the team structures were very different. So at Khosla, when I was there, for most of the time, it was 7 people in a conference room. It was a small team for the amount under management. And it wasn't a model where at Andreessen you had different teams doing different things. It was those people are doing everything from sourcing to negotiating the deal to sitting on boards, helping the companies. And then it was a small team. So there was a lot of collaboration in terms of looking at different opportunities.
Fascinating. Yeah. I'm taking notes here about how to grow Team Ignite, right? Would I take the Khosla model or would I do the A16Z model? It's probably something in between as I think about scaling. But, like one area I'd love to invest in is biotech, but I don't know anything about biotech. I'd probably have to hire a partner. And so it would be another team, right? It'd have to be making those decisions.
I think about this a lot. I think about scaling and team. The way that we've modeled it is a blend between A16Z and Khosla and kind of bringing in the best of both worlds and the best of both worlds from Lululemon, which I can talk about as well. How I think we're building a different venture fund. But I think having that more dynamic model, and we at Overwater will invest in breakthrough technology. We're all about commercializing breakthrough technology. We think that there's this massive problem where you have big ideas, incredible technology, but the founders don't know how to actually turn that into a business. And that's where we come in. And so we've built a team that can help scale that. And then also, I love reading science papers on the weekends and have a clear thesis of how we look at the undercurrents of what to invest in. But we'll bring in technical experts and advisors to really look at the next level of diligence, especially at the early stages.
Yeah, that's fascinating. And I'm also a nerd on the weekends, like watching, breakdowns of papers and archive and stuff. What's your framework for evaluating these companies as you're kind of looking? These are really early stage companies, sounds like breakthrough technologies coming out, kind of technology transfer, even maybe coming out of like research and university. How do you kind of evaluate potential?
So it's more of an art to a science, as I say. There are a few things that we look for. So one has to be massive market potential. I don't like incremental innovation. I like disruptive innovation. I like if this company succeeds, this is going to dramatically transform the entire industry, just not a component of it. So that's one. And I think on that we look a lot at these undercurrents of how consumer behavior is changing, where they're growing problems, kind of not necessarily what people view as huge markets today, but what will be big markets in the future. So we do a lot of work there. Second is some sort of unique science or technology. So we have a clear thesis of where we think big problems are already going into it. And then we look at, okay, knowing this acceleration of technology, especially AI and bio, what could transform those industries? So we do have a thesis driven approach before that layer, but we look at the technology, then we look at how amazing are the founders, their ability to recruit talent, retain talent, be bold, get things done, how fast can they move? And so we spend a lot of time understanding the psychology of a founder, which I can talk more about. And then the last thing is scalable business models. I think some investors go wrong. We're willing to take some bolder bets because we can help these companies go to market, but we look at, are there early signs of product market fit? Does the technology scale? Will it cost $100 million in VC funding and 10 years to actually come into fruition? If so, it's not a fit for us.
That's interesting. I think about this a lot as an investor. We have 200 companies in the portfolio. We, focus on B2B software mostly, but fintech, AI marketplaces. And, my thesis sort of, what I like to say, it's almost like a case by case. It's like that old phrase, I know it when I see it. I'm almost like the opposite. Like I'm kind of a generalist that looks at everything, especially in software. And so I have my own kind of trends I'm watching, but what are some pros and cons of the prepared mind approach, right? This is a big, debate in VC is like the benchmark Khosla prepared mind approach. I'm looking at the trends and the science and having, an opinion on what's coming and trying to fund what's coming versus maybe the more generalized approach where I'm kind of being opportunistic, taking everything on a case by case basis, trying to invest in the best companies at the right time. Seems to be two camps in VC.
It's a tough debate. And I think you have to be thinking about both. And what I mean by that is we've spent a lot of time thinking about this exact question. And so the way that we think about it is okay, we're going to take a generalist approach of where are the waves breaking? Where is innovation happening? Making sure that, we're constantly looking at these undercurrents, what's happening in consumer behavior that could change. And we're open-minded to completely new industries that we didn't even think about. But at the end of the day, I think if you have a mindset of what's the problem first versus the technology, that helps root into, does this really matter in the world? Like, will this be a $1 billion company? Is this, avoiding hype? And so we take a problem and systems first approach to how we think about it. But, we'll always say, hey, maybe there's an area or a technology that we haven't even heard of, and we have to be open-minded. So it is a balance. And I also think that it's a balance of qualitative and quantitative, and being able to also balance, like, you can have a thesis, but then if you meet a founder and you have a strong intuition and that founder is exceptional, you got to go with that.
Yeah, I love that. That's really well said. And it's something I struggle with as well. It's like I'm developing my own theses, thesi, around what's happening. And then, but all of a sudden out of the left field comes this amazing founder with a technology I wasn't even tracking. And the demo is amazing. And it's clear that has a venture backable, possibility here. You've backed companies in like fertility, sustainable food, wildfire prevention. Maybe you could talk a little bit about some of those and what excited you in those areas.
Yeah, sure. And I'll just quickly say before we wrap up the last question, which is, I kind of think I can't help myself with the overwater themes, but I think about it like a ship, right? You're constantly looking at where the horizon is. How do you get to your destination? And it's not always a straight path. You might have to go somewhere because there's a storm, or you see a better path to get to where you want to go faster with the current. So I think a lot around like making sure that you constantly are open to adjusting. Switching gears into what we look at. So we really look at what are the biggest problems to solve? How can technology solve these? And so we've, primarily, especially for Fund One, invested a lot in the future of health. I think that's a massive problem to solve. How to use technology to lower costs, create better outcomes or accessibility. For example, we've invested in areas from the future of drug discovery using AI to rethinking egg freezing and IVF. So some of these bigger, bolder ideas, or rethinking caregiving for your mom and dad using AI. We've looked at how can you shift healthcare from reactive into preventative using technology in big ways. So we've invested in a number of categories there. And then we've invested in what I call this like legacy infrastructure that's shifting into more, it needs to be transformed. And so we've invested in areas like, how do we make sure that there's grid reliability and using AI for grid reliability and to reduce power outages? How do you rethink food and agriculture as an industry? They're massive industries. They're not going to change. People need them at the end of the day. But how do they become more efficient? So those are some of the problems that we solve. And the surprising thing is that there's a lot of interconnected problems as well. For instance, fertility, one of the reasons that fertility rates are going down, there's some research around how pesticides actually are causing that in the food that we eat. And so we look again at the systems level approach.
That's really fascinating. Yeah, my investor radar is going off when you talk about these things because these are hard. These are hard things, right? Deep tech, consumer facing things. Like it's like two strikes against it in my book, right? As I look at things, like if it works, it's huge. But it's just like that path to getting some deep tech thing adopted in the consumer market is just so tough. Now, before we continue, a quick word about an incredible resource for startup founders. This episode of the Ignite podcast is brought to you by Build, spelled BYLDD. So what is Build? Well, they specialize with early stage startups, especially non-technical founders and teams, helping you build and launch scalable revenue generating software fast and affordably. Most startups can't afford to drop 100K on some big design engineering agency. Freelancers are risky, inconsistent, and full of project management headaches. For 10K in about a month, they can turn your validated idea into a real market-ready product. It's built for scalability. Past clients have been accepted into YC, Y Combinator, very impressive, received backing from Google, and raised multi-million-dollar rounds. And there's an exclusive offer for Ignite listeners. Get a free UI UX design sprint that's 3 to 4 weeks, a deep dive into your product experience, delivered completely free. This is normally a $10,000 plus service. So head to byldd.com, connect with the Ayush and team, mention the Ignite podcast. Let's get back to it.
Don't like the word consumer enterprise, which I know is probably the antithesis of whatever VC says, because they're like, I'm consumer, I'm enterprise. I don't think about it like that. I think about what is the problem that's being solved? How is technology solving it? And most of our companies are actually enterprise, but they will affect consumers' lives at the end of the day, is how I think about it. And I think what people miss about the opportunities within enterprise software is that a lot of it's driven by shifts in consumer behavior.
Yeah. And as you think about kind of this shifting healthcare from reactive to preventative, where do you see the biggest opportunities there for founders tackling this transition?
There's so much. So I could talk all day long about this, but I'll keep it short and sweet. But we've invested in areas like, okay, how do we know more about what's happening in our body? Like really, how do we make it so you go to the doctor, you get 10, they measure 10 biomarkers through a blood test and they ask for symptoms. Like that's broken. Why is it that we go to the doctor when we're already sick versus feeling better? And so if we were able to know more about what's happening inside our bodies in real time, that can unlock more. So for instance, we invested in a company called AdaptX, which is using similar to a CGM, but they can measure multiple biomarkers at the same time. So any sort of fluctuations or changes, you would be able to see it far in advance. So that's on one avenue. Like, how do we measure more about what's happening? And science is enabling ways that we can do that where we weren't able to do that. Then you have AI, which I think is fascinating. Like, how do we then, if we're getting more data about us, how do we then use that to actually understand what to do? And so we've looked at quite a bit in that space, both in terms of consumer and enterprise. We invested in a company called Penguin AI, which is using AI to really be able to automate between health hospital systems and insurance, and being able to do things like automate prior authorization, for instance, which is completely broken. You shouldn't have to be waiting for a life-changing procedure or appointment because it's held up by insurance. So how do we use AI to kind of speed that up? Or we've invested in Gamito and Overture, for instance, which is it's more around changing areas within healthcare, but revolutionizing them. Using science and technology to automate the embryology lab, for instance, or change the consumer experience. Gamito changes IVF from 21 days into 3 days.
Yeah, that's a big deal for people. I've had a lot of friends go through that process, and it's a lot.
It's a lot.
Expensive,
So
and yeah.
If you could make it a fraction of the cost, if you could drive it down so it wasn't as hard for the end customer patient experience, and with much better, reliable results, that's game changing. And so I think we've invested in some technology and companies that can do that.
That's amazing. Speaking of biomarkers, I'm a member at LifeForce. Heard of these guys?
Yep.
They come out to my house every 3 months, take my blood. And when I first got it, my biomarkers were not optimized. I mean, there was like at least 20, 25% that, my C-reactive protein was really high, testosterone was low, et cetera, et cetera. I'm in my mid 40s now. And, now we're about a year in, adjusted a bunch of supplements, got on Ozempic, got on T, and all my biomarkers now are like, my biological age, they say, is 38, which is, I'm 45 this year. So I'm a big believer in that. When will we get the weekly longevity shot? There's these peptide shots, there's, Yamanaka factors, there's the mitochondrial treatment that just came out of China recently. When do I get the weekly, hey, I get to stay young forever shot?
Well, I think that there's a lot of exciting things happening in longevity and aging, or the opposite of aging, reversing aging.
Yeah.
And part of this is like all of these technologies that I'm explaining, they're enabling breakthroughs in longevity because we weren't able to measure all this stuff before. I just did a study at Stanford personally around multi-omics and being able to really understand like way more from a more comprehensive perspective, what does that look like? And eventually that could actually be used to turn into precision medicine. If I were ever to have something in the future, being able to have more personalized medicine based on your own biomarkers. And so to me, it's real. I think over the next 10 years, we'll see some incredible breakthroughs come out that will hopefully help expand people's lives.
Yeah, you think about the market size for something like that too, right? If you're able to commercialize the Ozempic for aging, like how much would people pay? You ask anybody in their 70s, they'd be like, like everything I have. Like I'd pay everything. Like once there's this comedic reel going around the internet. I just saw it's like, if you're sick, that's all you worry about. And if you're not sick and you get healthy, you got nothing to worry about. And so, I mean, the joke there is like, health is everything, right? And, if you're sick or getting old and frail, that's all you worry about.
It's changing. We have a company on the Ozempic side. It's really interesting. They're using AI. It's a team of neuroscientists. So they're bringing in different types of discipline into this technology. But they've built this platform that it can predict drug failure. So people who are speeding up the process for these drugs coming into market that are game changing for people in general. And then also, how do you create drugs based on the physiology between men and women or specific subgroups, which it's not the way that pharma creates drugs today. So they've started with obesity, and they've created a better solution to obesity drugs that reduce the muscle loss, the nausea effects, especially between men and women, and also understanding how hormones, like women's cycles, drug dosing, and drugs in general. And so that is also a really interesting area to me.
Yeah, really exciting. What are some common mistakes that early stage founders make when pitching investors like you in deep tech, health, sustainability, these areas?
Oh, there's a lot of mistakes. Like this is one of the biggest problems that founders face, especially technical founders. And I will tell you right now, if you could ask our founders, we are very hands-on with the deck and the storytelling. How are they telling the story? They might have amazing technology, but because they're so in it and they're technical founders, like, well, why does this matter in the world? What kind of impact could this have? What kind of outcomes and sales projections could this enable? And some of that mindset's not usually there. It's, hey, we launched this amazing white paper. What do you think? It's great, but we actually have to turn this into a business. So that is a big mistake of not being able to tell the story in the right way, and not being able to put it into the context of why does this matter to investors? Why does this matter to people? That's one. And then I think the other mistakes that they make is I think the sooner that you think about commercializing, the better. And so being able to build a team, being able to think through like, okay, how do we test early signs of product market fit sooner in the technology process? How do we think about defensibility? It helps these companies reach their trajectory faster by thinking about it earlier. And that's something that we try to push our founders and companies to be mindful of.
Something I struggle with too as an investor, and some people would say it's just capital allocation. You're actually not making a difference in the startup at all. There's like this debate inside a venture where, some folks think they can make a difference, and maybe that's proven out. And some people are like, I can't make a difference. It's obvious where you fall on that debate, but yeah, I'd love to get your thoughts on that. When you're picking a founder to back, what I typically look for is just chip on the shoulder, has to put a dent in the universe, just force is really strong. They're going to succeed whether or not they get my money, right?
Mm-hmm.
And obviously, I'll help any way I can, right? Team Ignite and everybody, but they're going to succeed no matter what. Where do you come down on that debate? Because it's a little bit more difficult for you when you're doing deep tech and you are getting these PhD level researchers trying to commercialize technology.
It's nuanced. It's a big debate. You have people like Keith, for instance, who would say at Khosla, like even within Khosla, like Keith would say, you're going to back the best companies and they're going to succeed without you. And actually the best companies need minimal support. Node would say the opposite. He would say like, hey, we have the opportunity to push these founders to think bigger. I take a more hands-on approach, which is, especially for early stage, especially for these really hard ideas in the world, is my goal is to push these companies to think big, think bigger, and then scale back. And so to really push them to think, really, how do we make this transformational? How do you think about where could there be creative ways to ride bigger waves sooner in your trajectory? So whether it's, last week, for instance, helping a company with a major BD deal as a seed stage company, which they probably wouldn't be thinking about that. And so we take a much more hands-on approach. And we also look for that in our founders. We like founders who are self-aware, who have a strong tenacity to grow in their own leadership development. And that to me is really important, to be able to say, okay, you can take my feedback as a data point and you can do with it as you will, but do you want to be collaborative? Do you want to have a partner at the table? What kind of investor? And so we vet for that before we even invest.
Yeah. So you're on fund 2, you said. What did you learn in fund 1 that you're kind of applying in fund 2? How did your strategy shift or change? And what's your check size? How many checks you're writing? All those characteristics.
Yeah, so we're actually still in fund 1, technically. What we've learned is, we've learned a lot of things. One, from a thematic perspective, we're just seeing this explosion of technology. So we're constantly looking at how is technology evolving and where there are opportunities, long-term opportunities, not short-term opportunities. And I say that with we are disciplined around valuation. We're not chasing the hype. If it's
an AI SDR though, does AI reach out for sales?
No, I mean, in those founders,
it's a joke because I see that every day. I see an AI SDR startup.
I'm like, you can go and you can raise. Yes, you could raise at a 50 million post, but why would you at the seed stage? This is why I think being disciplined, why not having crazy valuations is actually better. There's this hilarious Silicon Valley episode clip where they're negotiating. He's like, well, why didn't you ask for a lower valuation? And the founder's like, I didn't even think about that at this stage. Like, why would I lower my valuation? But I actually think it's helpful for companies. And so that's what we've learned, that we don't like writing smaller checks. That's not my thing. For fund 1, we had 80% core, 20% opportunistic. And it doesn't make sense for our model of being able to be hands-on. So we've really shifted just to focus on leading, co-leading, pre-seed and seed, having much more skin in the game. And that's, I think, a win-win for founders and also the potential to have great returns.
Yeah, I love that. How has your background and brand strategy and your experiences informed how you build your venture capital brand now and support founders today?
Yeah, so how we think. So we've built the brand. So Overwater, the name came from helping founders to be overwater versus underwater. That's where it came from. I was at dinner talking about it. And we're only just getting started with the brand that we want to create and how we want to be able to support founders. I am a solo GP, so there is, I've been thinking a lot about how do we scale that over time.
Yeah, I can relate.
Part of what we did was, okay, could we bring in these experts to have we call them on the dock programs based on aggregate challenges that are coming down the pipeline? Can we have this network of people who can help when a founder is struggling with how do I think about my financials, or how do I think about creating this go-to-market strategy? And so we can plug in people in a dynamic approach. And so our goal is to not just be another seed fund, to build an institution, to build a brand that when you go to, even the colors that we have on our website, and I wanted it to feel like you're going on vacation, like it's something that you can feel like you can be your best version of yourself versus like a boring conference room on Sand Hill Road. And so we are only kind of just getting started with how that brand comes to life. But to me, it's been exciting to lay the groundwork.
Love that. And I realize we're fire and water, because Team Ignite's like, excitement and orange flames, and, we're growing, like sparking innovation. But I love the water theme too. That's like a very cool theme. I've toyed with the idea of turning the flames into blue flames. So it's like a slower burn, but
nice.
Yeah, I'm not sure yet.
I love playing off of the elements. There's a lot of interesting analogies that you can have, and I think it just makes it more fun and interesting versus like the boring, typical standard way of doing things. I don't want to do that. That's what we're not doing.
How do you recommend or advise founders to build their brand? I mean, obviously, you've done this before, and how do you advise founders in this area?
Yeah, I think building a brand is not something that is done overnight. It's not a logo. It's not the color palette. It's a lot of different elements to consider. I think when you start with it, it's who do you want to be? What kind of company do you want to be in 10 years, 20 years? Starting to think, what does that roadmap look like? And then working back and saying, okay, what are your values? What's your mission? Like, how do you really want to be different? And then bringing those values to life every day, whether it's in the people that you hire or the meetings that you have or the way that you show up. And I also think that the more creative you can be, the better. And so we always take the approach that it's not about ads. It's around like understanding your consumer and where they or your buyer, whether it's enterprise, going where they are and showing up in a really creative way that gets people talking. You educate, inspire, provoke thinking. And so doing things in a creative way is really important. But for a lot of these companies, especially the technical ones, I encourage them to be thinking about their brand earlier. So launch a website sooner, start having more thought leadership pieces out there. Why is what you're doing, why is that important to the world? And so we bring that thinking from the very beginning.
Yeah, I love that. So thinking about the future of human and planetary health, what are some underhyped areas that you're keeping an eye on?
Yeah, there's a lot. We've been looking a lot at this like next gen chemicals, pesticides, as I mentioned, like rethinking manufacturing, because we're only just beginning to understand how horrible, like both what we're eating and the materials that we're using around us, how they affect health and how inefficient they are. So really thinking around that quite a bit. We're looking, that's one area. We're looking a lot at aging and longevity, which I think is up and coming. We're also looking at neuroscience because technology has enabled you to be able to measure a lot more about your brain than you were 10 years ago. We're looking at how do you transform these massive industries like food and ag, like manufacturing, supply chain, using technology to automate some of these areas in a cheaper, faster, more sustainable way. So that's an area that we're spending a lot of time and rethinking, like, how could you really do that in a big way? And what does that look like? I think we're, especially with the onshoring conversation that's happening in the US, like we really need to be thinking about some of these areas. And then, of course, preventative health. I think there is a shift happening from healthcare being about going to your doctor to taking it in the hands of the consumer. You look at companies like Function Health, for instance, like they're showing that there's a willingness to start paying out of pocket for some of these treatments. And so we are looking at what is the 2.0, 3.0, 5.0 of these types of concepts.
Speaking of current macroeconomic environment, like how is this affecting how you think about these frontier tech, startups and funding them, as you kind of get the onshoring thing, the tariff stuff, the macro uncertainties that we're facing here in the middle of 2025.
So there's crazy instability in the market right now, and people are scared. And I think, to me, that means opportunity, because I think with technology, this time period is such a great time to invest with AI and bio in particular. There's so much happening. But I do see across the board from both an LP perspective and a GP perspective that we're kind of retreating to be more risk averse. And I hate that. And to me, I'm leaning into the risk. Like, okay, how do we do it? But how do we do it in a calculated way? So making sure, like, okay, how much funding do they need? Are they really thinking about financials in the right way? Is their model scalable? When do they reach profitability? How do they? So we have those conversations earlier in the process. But we are looking at anything and everything. And I think that there needs to be more investors who are willing to take big, bold risks on things that will transform our industry. And cost structures are coming down, talent are going to work on these problems, technology is there. So to me, to actually be able to transform these industries, we need VCs willing to take bets and take risks.
Do you advise your startups to, maybe instead of raising for an 18 to 24 month cycle, maybe do 24 to 36 months? Or how do you think about that? Fundraising timelines?
So it depends on the company. Every situation is different. It's not one size fits all. It depends on what is the company trying to do, where are they at in their milestones, what are their milestones. So it's dependent on that. But in general, what we were seeing, especially over the last 3 years, is we've been seeing a good shift to more efficiency, more mindfulness around burn and runway than ever before. Companies that traditionally were going out to raise every 18 to 24 months are being more cash constraint, and they're taking 3 to 4 years to raise their next round because they don't need to. They can do more with less.
Yeah, I love that. So what, some closing thoughts here before we do rapid fire. What's one piece of advice you find yourself giving founders over and over again?
There's a lot of advice. I always take the approach of being blunt with our founders with good intentions, but making sure that I tell them the real thing. I mean, the biggest advice is, are you telling the story the right way? Whether it's for investors, whether it's for team members, whether it's for sales conversations. And then the other thing is, like, you have to think bigger and then scale. So we can't be in a place of a mindset of scarcity. You have to be in a mindset of abundance to be able to really transform and be able to execute properly.
Awesome. Let's wrap up with a rapid fire.
Okay.
What is the biggest myth about VC that you wish more founders understood?
Biggest myth. It's a good one. That we're not just check writers. Like, yes, you can bring in capital, but who you have around the table is much more important.
Love that. You've worked in both consumer and deep tech. What's harder, building a brand or scaling a hard tech startup?
They're hard for different reasons. Every sort of scenario has different problems and different problems to solve. Deep tech is hard, but there are a lot of there's hard problems about everything. It just depends on which problems you want to solve.
What's the most exciting startup trend that isn't getting enough attention right now?
Ooh, most exciting. Fertility. I think there's a lot of interesting things happening there.
What was it?
The future of fertility.
Oh, yeah. What's one habit or routine that helps you stay sharp as an investor?
Ooh, constantly finding the balance with saying yes to no. So constantly kind of pushing yourself outside of your comfort zone and exploring areas, never settling in one box, but constantly exploring fringe areas and pushing yourself outside of your comfort zone.
What's a book or podcast you'd recommend to founders?
Ooh, I love Never Split the Difference or Never Split the Check. It's around negotiating and the psychology of negotiating. And I think the psychology of building a business is often underlooked.
I love that. If you had to invest in only one sector for the next decade, what would it be?
Future of healthcare. There's so much there. It's a $1 trillion industry, completely broken, massive problems. There's lots of things to solve.
What's a mistake founders make when thinking about fundraising strategy?
The mistake that they make is feeling like they need to rush to talk to VCs without really thinking through the storytelling, the problem that they're solving, the narrative that they're having. VCs are irrational. They're motivated by fear, greed, as Vinod would say. And so you have to tap into the psychology of investors.
That's really good advice, actually. Favorite place you've traveled to for work or inspiration?
Ooh, that's a hard one. So for me, I operate on a very fast speed and mode. Like, I am in a sprint mentality, doing 14 meetings a day. And so I like traveling to places that have the opposite vibe, that kind of give me a different way of thinking about it. I love water, as you can see from Overwater. So I like places that force you to slow down and think differently. I love Japan, for instance. I love Tokyo for thinking through different ideas or a different way of thinking about it. And I also love places like British Virgin Islands that kind of make you slow down and rethink how you're doing things.
I love the VI. I lived there after college and got married there.
No
Lived
way.
lived on St. Thomas, the whole, yeah. And then
Amazing.
went to New York. I was studying. It's funny. I was living on an island after college, working in a restaurant, and studying for my CFA every morning for 2 or 3 hours. And then I moved to New York and worked on Wall Street and hated it. And the rest is history. But yeah, really, really fond memories of the Caribbean. I love that. That's where we're going to do Club Ignite, actually. We're going to do it in Cancun. So everybody can kind of come together first weekend in November. A little plug for Club Ignite. That's our kind of unconference for Team Ignite. And no ballrooms, no speaking heads, just people hanging out near the water, over water,
Nice.
hanging out, doing fun things in the Caribbean.
I love that. It's an experience. Actually, I worked from there for a week, and it was one of my most productive weeks, which is not what you would think about, but because it was a different pace.
I just got back from Hawaii, and we lived in Hawaii too for a few years before we came to California, and I worked every day, and it's just something therapeutic about having your laptop and just looking out at the ocean and hearing the waves crash. And yeah, I love it there.
It's like time for creativity. You have to balance. Think a lot about that in schedule. Like you have to balance being able to move quickly and get things done, but also having space to be creative. One of our venture partners, by the way, another book is Your Brain on Art. It's all around how creativity affects productivity. And so it's also worth reading.
Oh, wow.
She studies this.
Yeah, I felt as you listen to the waves crash and you're answering emails and negotiating, term sheets or whatever, you're just, everything's just kind of relaxed. It's not a big deal. What's one company outside your portfolio you wish you would have invested in?
That's a great question. There are companies that I really admire what they're doing. I think Will is doing some really interesting things in longevity. Summer health in the pediatric space. Motif in terms of neuroscience. That one was like a big idea with interesting technology, and I'm really excited about what they can do to transform an industry.
Well, this has been an awesome conversation. Where can folks find you online?
You can find me our website overwater.vc, overwaterventures.vc, and overwater.vc. Sorry. And you can find me online. I'm on Twitter. I'm pretty easily accessible. Kristina at overwater.vc.
Thanks so much, Kristina. I really enjoyed it.
All right. Bye.